Hello and welcome to this special show, Investing in Cyclicals. Cyclicals by nature, of course, it includes commodities, but a lot of other stocks where a lot of money has been made and lost, both on the upside and on the downside. I have a guest with me who has got many multi-baggers in the past. Managed to get in Balaji Amines, for example, at 8 rupees, has been more than a 90-bagger. I'm not impressed. Rain Industries at 36 rupees has been a 10-bagger, of course. Godavari Power at 63 rupees, nearly a 10-bagger. Dwarika Sugar got in at 4 rupees in 2015. Managed to sell at more than 10 times at 50 rupees in less than 3 years. Someone who is a passionate investor, Jiten Parmar, is with us. Jiten, hi, good to have you on the show.
Thanks for having me on the show.
Yeah, so it's your first show, so I just want to, tell our viewers about you. Jiten is, of course, a passionate investor. He was a software engineer who founded an IT company in the USA and sold it at the peak of that IT boom in 1998-99. And since then, he has been into equity investments. And for those of you who have been following him on Twitter, has got a good fan following and has got a lot of 10 baggers, 20 baggers, 100 baggers. So just a point here, he's not a SEBI registered advisor. So none of this talk that we are going to have is recommendation. It's all for educational purposes. As they say, teach a man how to fish instead of giving him a fish. And that's what Jiten wants to do at this point in time. Jiten, thanks a lot for dropping
Thanks for having me.
Okay.
And particular investing in cyclicals and, commodity stock strategy is something which I've been trying to, learn this over the years. And this all started in 2009 and 10 when there was the polyfilms segment or the sector. They had a rapid rise in prices and stocks. Some of the stocks went up 500% in just 6 months. So this is when I got interested. I invested in that cycle, and since then I've been trying to perfect the strategy. And every day is a new learning, and it's been hugely rewarding for me in the last many years.
Okay, it's been hugely rewarding, of course, for you in the last many years. We'll discuss some of these examples as well. But what really, Jiten's presentation, by the way, is on his blog, so you can go and visit that blog. What stands out for me, Jiten, is you say cyclical plays are like going into a pub. Enter during happy hours and leave at midnight when parties in full swing. Even if you stay late, be near the door, or you might end up paying the bill for others too. Exit is as important as entry.
Exit is probably more important than the entry too.
Okay.
See, this type of investing is a high risk, high return strategy. What I've tried to do is, cut down the risk as much as possible. Try to enter early. And leave when it is at its peak is what I try to do.
For example, Dwarika Sugar, you say got in at 4 rupees, you sold it at 50, thereabout. After that, you have seen the stock move up further, but after that, the kind of big crash that we have seen as well.
So in 2015, why I got interested in sugar was that, for 2 years, monsoon had failed in India. And you know that India is a big producer and Brazil is one. And Brazil crop had also failed. So these two were the triggers for me to look at sugar, and that's when I started entering into sugar, and it became very clear that supply will be limited. So this whole paradigm of cyclical investing, the most important thing is to monitor the supply. So supply, that supply is going to be limited. So obviously the prices will go up. And what happens in these is you can play it 2 ways. Some people buy the commodity, underlying commodity on an exchange, let's say, for example, sugar. So as the cycle plays out, what happens is the incremental, rise in prices gets added directly to the bottom line. So sugar went up as a commodity, went up by 50% in those 18 months or so. But stock prices, some of them went up 2,000%, some went 700%, some went 1,000%, some 300. Even the worst also did, much higher than what the underlying commodity rose.
That's part one. I got that.
Right.
But within that, if you would have bought the best of the lot, say Balrampur Chini, you wouldn't have made as much money. But if you bought in, say, a Dwarikesh or a Dalmia Bharat, you made a lot more money. So how do you go about stock selection once you get a sector right?
Yeah, so what I generally do is I invest in this type of cycle as a basket.
Okay.
So I prepare a basket of, let's say there are 30, 40 sugar stocks available. So I'll shortlist 10, then again further drill down to, 4 or 5.
Okay.
There's some stress test I do. I need to be sure that this company will, because what happens is sometimes it might not play out immediately. You might have to wait for a year or two also. So you want to make sure that, in those 2 years too, this company will survive. Because a lot of times some of these companies don't
May not
survive.
survive, yes.
Okay, so that is one of the stress tests I do.
Okay.
That this company has financials, where they can survive for another 2 years of bad times. So then I narrow down to 4 or 5 companies.
Okay.
And then place my bets accordingly.
Select 5-6 stocks,
yes.
And in that, there'll be some which will be 5-bagger, 10-bagger, 20-bagger. Some will be 2-bagger. Some will be 50-60%.
Exactly.
But overall, you still make a lot of money.
So sugar also I did study that previous cycle from the bottom to the top. If you take all the sugar stocks, the returns, the average returns from the bottom of the cycle to the top of the cycle is 9x.
9x for the basket.
For the whole all sugar stocks.
For all sugar stocks. And if you got a basket of 5 to 6 well researched stocks,
so you can even go more than 9x in that, or you can underperform depending on your choice.
On, of course, which stock to choose. Yeah.
But the thing is, so average is 9x. So there are times where there are 5x. There are times when they return 12x. So average is 9x. So what I made a strategy was, if I get a 7x is, when I will exit, or at least be alert. And then again, good monsoons, continuously, good monsoons and all. So I kind of guessed that, sugar production will be very high. So that was, in 18 months, I exited at a 7x on my whole basket.
Okay. So let's do one thing. For investments here, there are 3 key points that we're discussing. One is trigger and the entry. Second is the process of stock selection and staying into it. And third, and most important, as Jiten also mentioned, even if you're a long-term investor, is exit, because you have to exit some of these stocks at right price. Let's start with triggers. We've already discussed sugar, for example. The other fascinating example that you keep giving, and it's on your site as well, and we'll show the chart, is MOIL. Tell us what was the trigger here, and how did you manage to make an good entry here?
Yeah, so MOIL, if you see the financial data for many years, this about 2016 I'm talking about, is when I started looking at it. For years it was giving net margin, EBITDA margin of 50% upwards, 50, 60, 70, those kind of margins it had, because being a government company, access to open cast mines, and lowest cost manganese ore producer, so they will definitely have high margins. This is the time when margins came down to 11%, which was at least 3 or 4 times then their average. So then, and still it was profitable. The good thing is it was profitable, and over the years the accumulated profits were 90% of the market cap. That much cash it had in. So this kind of basically it was in cricket terminology, I'll call it was a low full toss.
Full toss, yeah.
Okay, so these kind of low full toss, one should hit for a 6.
Yes.
Is what. So that's where I got interested in MOIL, and it played out very well over the next 2 years. So these are the things which you see. You see that EBITDA margins are very low. Those can be good entry points. Of course, you need to study the sector. You need to see whether the cycle is going to turn and so on.
Any more interesting trigger for entry?
So there are many. I mean, chemicals. If you see, chemicals, you could see that China. China is one of the big factors in many of the cyclicals which I played. For example, steel. You could see that China was closing down a lot of polluting industries, steel being one of them. A lot of capacities was going off the ramp. So you could guess that basically the cycle is going to turn. Chemical we just talked about. Chemical also, the highly polluting industries, because of the problems of pollution in China, a lot of these industries are closing down, and a lot of the suppliers are looking at India as an alternate. So you could see that chemical will do well, and it has played out in the last few years. Same thing happened with paper. So these are the triggers. So for steel, for example, the trigger was basically China closing down capacities. Indian government put a MSP in place. So these two triggers were enough for me to start looking at steel.
Okay.
And then you could see the iron ore prices trending up and all. So that's when you add more.
Okay, a fascinating example has been Star Paper, and you've been talking about the
Paper sector,
right? The trigger was the largest company closing its plant.
Yes. So again, here I made a basket of 4 stocks. So the largest company in India, they were into financial problems, and then they closed quite a few of their plants. I mean, they couldn't run it, obviously.
Yes.
So immediately that there was shortage of paper, so paper prices are going to go up. So that's when I made a basket. There were few of them, and they really played out well. I mean, and again, if you see the chart also, or the financials of that company, you'll see that just before the upturn, you see their margins going to historic lows.
Yes.
And
for Star Paper, for example, minus 17%.
Exactly.
Yes.
So this is when you start getting interested.
Point here is, once again, let me ask you. So, for example, in March 2012, they did minus 17%. In March 2013, minus 6%. And in March 2014, minus 4%. But now, after that 5%, 9%. But now I'm looking at this data with the benefit of hindsight.
Yes.
Right. At what point do you get in here in that case then?
So as I said, paper, it was this thing. The trigger was that.
Okay.
And then you study these financials.
But you will have to endure some pain as well after you
Yes,
invest?
you might have to. As I said, that's why I conduct the 2-year test.
Okay.
Another 2 years, can they survive? In this case, it was very, very, easy to see that, paper prices are going to go up, because the largest producer in India had to close its factories.
Okay.
So it was kind of an easy one. Same thing happened with fertilizers. After 2 bad monsoons, you had a good monsoon. So that fertilizers are going to do well, because good monsoons mean demand for fertilizers. So fertilizers, agri will do well. So these kind of triggers the market throws you need to catch them.
Okay, you need to catch them. Let's do one thing. We need to take a short break. Once we come back, we'll have some more examples. We still have to go through the other part, the exit process. And also, a lot of you will be thinking this is all past data. What about, current data now? We'll discuss all of that as well after this break.